guys, how I doing? Yo, we're live. How's it going, guys? Let me know you're here, please. I have got us on YouTube and X. So if someone's on YouTube watching this, say hi. Let me know it's going all right. And also, if you're on X, let me know so I can see everything's good. But everything does look good from my end. We've got about 65 people here, it says, on X. Right, so I think there's a bit of a lag actually, so I'm going to get straight into it just to cover basically what we're going to be looking at in this stream. So as usual, to start off with, we're going to be looking at Bitcoin, Ethereum, and Solana and Hyperliquid. We're going to be running through the plans that I talked about somewhat earlier in the video this morning, but mostly just kind of an update after today's price action and what I'm going to be looking for next. Also got stopped out on a trailed stop in slight profit on my Bitcoin shorts that I took last week. So I'll be talking about that as well. And then I'm going to be doing just a couple of sections today. If you've got any chart requests after I've done my bit about the crypto coins, if you've got any chart requests, leave them in the chat or I will prompt you again and we can run through them. And then I'm going to look to make these streams educational for sure. Like you can go away with something and action it based on feedback that I get from people and questions that I get from people. So if you do have something you'd like to see covered in this stream, then let me know and I'm happy to create a section on that, something technical. Then something kind of pertinent, especially with a situation I'm going through now, is about sitting on your hands after a big move. It's a thing that I've had to and still have to like consciously work out and stay on top of. And I'm going to talk about that in a little bit more detail later on. But I think after we've had big moves like we've had recently, you can tend to want to like just jump in and continue to move really quickly. Whereas I'm going to be talking about how to have just a little bit more patience and wait. And also that will be a kind of nice follow on from what I'm going to be talking about in the first section. So let us get to it. Let me just double check the chat. Yeah, we've got people in YouTube. Hello, Mr. Geppetto. Liverpool fan here, by the way. Odds and Salah coming back to join the Areola Revolution. I think that's how you say his name. I would love it, but I think he's laid his bed now and it's probably going to be off. But it'd be nice, wouldn't it? I would like him to stay. It seems a bit... I watched the highlights for the Egypt game and it's very strange watching him play and thinking like, oh, he's not with Liverpool anymore. It was quite weird. And I kind of feel a little bit strange knowing that this... Because, you know, the thing is with Liverpool, it's like the same with any like football team, really, when you've got like generational players and you've had someone kind of like a routine you've got in your life watching the same person, or in Klopp's case, like being there for like a nearly 10-year period of your life, you know, because seeing like and expecting the same thing and knowing what to expect every week. And yeah, and then when that happens, when they leave, like it's strange, not part of my life, but like there's a weird kind of feeling of not having that person. Like I'm not going to tune in to watch that person anymore. So yeah, it's quite strange, isn't it? But you know, it's part of football as well. Right, so we've got some questions coming in, which we'll cover afterwards, but we might as well get straight into this chart work and then I'll get back to the questions later. So let's look at Bitcoin on H4, and I've got all these levels marked from the video this morning, but also going to run through them again. So anyway, on H4, we basically had that big range low from early in February gets taken out, and we have compressed price action leading down to it. So when you see compression, it's either going to do one of two things. It's going to compress and then impulse, or it's going to do the compression and then it's going to retrace back for the liquidity at the other side of it. Now, that is basically dictating the current trend, which is to the downside. This is holding us down, and it's part of a greater downtrend. So back up at this level, I expect, because then we have to start talking about another like high at 74K. If this holds us down, then we trend down. But if it breaks, then you can start looking for longs up to the next area of liquidity, which is here at about 74K, as I said. So when it didn't follow through here, it was pretty good odds to long that back up here. But my personal style is to wait for price to get up there and then take the short, which is what I did last week, and unfortunately hasn't followed through in this instance. And I got tagged out today for about 0.2-ish R win on the risk rewards, but in terms of like the fees, because I held it over the weekend, like it was a little bit more. So in terms of raw profit, 0.15 or something like that. But it means that because I'd gone in with quite a wide stop, I'd used this on a lower time frame as confirmation with a stop above this big high. So even though I got short, oops, wrong tool, even though I got short somewhere like here as my average position, I had my stop up there because I thought if this goes, it goes, sure. But this was a danger, and I've been saying this since we hit the lows. The danger is that this origin level here, which is where price broke out of the downtrend and set this entire trend up, this swing, this didn't get tested to the extreme, and then it put in a reversal sign where it comes down, ranges, and then breaks above it, holds, and up. And then your boy also tweeted down here about bouncy ball meme. And by the way, I've got a pretty bad strike rate of saying, or I don't say to trade them, obviously, but I've put a few bouncy ball memes up in the past, and very, very rarely work out. And even when I post them, I kind of think, I don't think this is going to work out, but this is exactly like the bouncy ball meme setting up. And I'll post it and it always like reverses. It's quite funny. So just do with that information as you will. And here at this point, it's going to come up to the next area of liquidity, which is here, which is where the sell-off happened to create the low down here. So we had essentially the compression and then the impulse down. So I had trailed my stop above this level, and I'd even just put a tweet up saying it shouldn't really be going back up there above 64.8K. So especially when we had this drop last night, I was like, right, this is now, it should be going. If it doesn't, it's likely to break this level and then head back up to the next area of liquidity, which is this range high here. So I've been taken out of that, and I'm looking for it to come up here, in which case, if it does go next time, it should be going, like 100% should be going, and I can get in tighter with that than I had before. So even though it's quite annoying, like when I get tagged out like this and then it starts, like it fakes to high and then it looks like it's going to go, in which case if it does, like I'll look for another setup along the way. It makes sense. But it's difficult to kind of sit through that when it's bounced perfectly off your level and then creates a drop but hasn't yet made a lower low. So in an ideal situation, this is now going to go deeper for me to get where I really wanted to short was from before, was right up at the extreme of this level, which I said it hadn't yet hit. And I've been wary of the fact that when you've had this, when it hasn't hit the extreme, especially after it didn't break that origin level, it's likely to come back up to that extreme and then give the reversal pattern. So even though down here I got the 0.2-ish R stop out, ideally, in the best case scenario, it's going to come up here and then give even more confirmation compared to this time that it's going to go. And I've been saying as well that if it's really that weak, it's not an A grade setup. I didn't really like that it hadn't put in a nicer range than that. But if it's going to go, it's going to go. And if it doesn't, I'm going to get another opportunity anyway. But if it doesn't, this is exactly what I've been wary of. And I'm just wary of the fact that it might be coming back up there. So that's kind of the plan as the best case scenario. The worst case scenario is that it's going to take out this low without me at about 63K, 63.8K. And then I'm going to have to look for a continuation. And I don't like looking for continuations because they get retested more than tops do. So I prefer to have this come back up and put something in around this previous range, which is where basically this entire sell-off down to the origin level came from. Because if we look over to the left, it wasn't really key areas, but we had this big pump when the market looked like it was going to sell off, and then holds in a demand zone where if price is bullish and is going to break that high, it bounces off. It should be bouncing off of there, but it doesn't. It breaks through with the impulse, retests it perfectly, wicks it, and then shoots back down. So this is indicative, this type of price action where it hasn't really built for long at the highs, and then you get this big collapse through it very quickly. This suggests it is going to push through, and it did, but then it came like close to it, moves sideways, and then creates the high. So when it did that, especially after this range and then broke to the upside, it needed to go down there. And it pushed up. I'm like, right, I need to get in defensive mode because it's probably going to retrace. I don't know how high it's going to retrace to, but it makes sense to me that it's going to come back up here. And in which case I'll look for another position. But I don't feel comfortable now sitting here, like feeling like I'm going to have to nurse this position, or how can I get out if it does come up, and just have it in the back of my mind. I don't like that feeling. Particularly when I'm spending time with my son, I want to be present with him. I don't want to be thinking like, oh fuck, like I saw that candle go up. So I'm just very strict with my rules that once it's got a couple of lower highs and a couple of lower lows between my entry and where price is. So when it got down here, I initially moved up here, and then once I saw this last night at the open, I moved above there because I thought, right, if this is going to go, it's going to go, and it should have no business coming back above 64.8K. And as we see, it's now coming back up above 64.8K, and looking like it's going to come back higher. So that was the plan. And if it had dropped through here, I think it would have absolutely continued. And I think it is going to test it again at some point, but I feel like it may want to build up here first. So the other thing to say as well on the weekly time frame, this is just Bitstamp. I'm not using Bybit anymore. They've got the low as a flat candle, so I imagine we're going to come back down to that low at some point this week. It just depends how high we're going to be going, really. So in terms of actionable plans, what I'm looking out for is for price to come back up to this range, break below it again, and then sell it back down. And I would do it with a bit more conviction, a bit more risk, and a bit of a tighter stop compared to before. And this entire thing, this previous trade, ends up being like what was feeling the waters out here because I wasn't getting the right signs, ended up being surprised and that it dropped. But this could also be looked at as a fake out before we get a push back up, and then the real level comes here. So that's what I'm waiting for. This is how Bitcoin has tended to behave recently, in the same way that we had this high up here. Or even these highs, it comes up and then gets a big sell-off, and then it comes all the way back up again, and then it has a big sell-off. I don't think we'd then have this. I think if we're looking at, we're about sort of this situation here, I believe if we had a move similar to this, again, it's going to collapse through, because it's a bit of a different environment. It's a smaller move, and a lot more of a confirmed trend, rather than seeing it retrace back up. So I feel like it does this behavior where it looks like it's going to go, and then it doesn't, and it comes up higher, and then it looks like it's going to go, and then it doesn't, and then it creates a lower low. So that's basically what I'm watching out for on the hourly time frame. If that doesn't happen, if it doesn't come back up here, then very simply, I'm just going to be looking for it to range around here and then start losing this low, in which case it should be coming back down below the origin level. But you can see, like, if you see the rejection from the highs, and then you get this kind of range, you can put it as diagonal like that, or you could put it sideways. But the signs will be down a lower time frame then that I could get something similar. And then if you get that impulse down for the second time, then it really shouldn't be coming back above that impulse. If you got it here, it should be continuing. So very simple plans: continuation or reversal. Reversal would be preferred, but if we get the continuation, it's up to the market, right? So they're my plans for what I'm seeing on Bitcoin. Has anyone got any questions on that? I'm just gonna have a look at the chat. I always get more interaction on YouTube than I do X. It's very strange, because X has more views. So yeah, just having to wait for things, but I believe we're still heading down. It makes more sense. But also, just to confirm, for the sake of the title of this, this sell-off here was where the new low was created. I would say if price gets above there, the market structure has changed, because this is the origin of the attempt to send the market down. If we start getting above there, above 74K, then I would start thinking that we're going to have a bull trend, and we have a bottom that has formed. It may not look like just like a little range like that, for example. It may come up and then down and then up and then down and build like that, in which case I'd be happy to like jump back into Bitcoin. Like I'm bearish for sure, but if I saw something like that, I'd be like one of the first people to say, like, this is definitely 100% a bottom. But so far we haven't seen that, and I don't know if it has the appetite from here to retrace this entire move. And if it does, there's also a massive short opportunity, but it would mean that we're going to have a very like weird summer, like choppy summer, I think. So I prefer it just to drop, basically. So yeah, there we go. We'll see. Ethereum on the daily time frame, not much to say really. H4, yeah. So I'm not really like too keen on Ethereum where it is at the moment. I think it needs more volume, and I think it needs more what do you call it, price action to build. Just reducing that a little bit. There we go. We need more price action to build. We need more volume in the market, because you can see it's very compressed, very small, like little candles, not really doing much. It's that kind of environment where you get that drop and you think, right, that's it, it's going to go, and then it doesn't, and it just chops around. So a few levels I've got of interest are, we have the compression here, which is where that big range low from February got broken from. That's where the sell-off happened to create the new low and break through the level. And it hasn't yet hit the extreme of it, which is exactly, again, what it did last time. It faked the extreme. The extreme of it was like here or something, up here. And when it took this level, because we shorted this level, and then I got tagged out at break even on it because I thought it was going to continue down. But I'd said at that time it hadn't yet hit the extreme, so I imagine it might come back up and hit it, and it did. And then that's where we got our short, the bigger short, to jump down. So even though this didn't work out, the market then gave really clear signs that we're going to have an even bigger opportunity, and seized that with both hands. So I feel like it might do some sort of similar behavior where it comes up to the extreme, builds a better top looking pattern, and then sends it back down. That's what I'm looking out for. I don't know in this current price action really what the best level is, because it's really unclear. So I look at this as a bit of compression. It's the same sort of like chain. And then you've got the shallow part where the sell-off kicked in to create the new low. And then you've got that level up here, which is where we shorted, and on M15. And that's kind of like the extreme of it, like up here. Maybe I would say ideally actually there. So anywhere between this current level and 1842, if we get signs of exhaustion, I'll be looking to short it. If it comes up here though, I'll be looking for it to tap into that key supply, similar to how it did on H4, where it starts ranging just below it, taps into it, and then falls eventually. So I'd be looking for something similar, maybe if it gets up to there about 1840, to be quite honest. And that'd be a really nice opportunity to short still, because I just don't think this is the type of volume that you expect when you're looking to build something up to go long. But at the moment, not enough price action here, very scrappy price action as well. That does not give me anything to action just yet. So I'm just gonna have to wait for a few more days by the looks of it. Gonna have to wait for more price action to develop and then get a more confirmed top pattern or continuation pattern, because I'm not really looking long. I wouldn't, even though it might go up, I just wouldn't trust these moves. I mean, if I took this breakout and it like pushed up above my supply zone, still within an area I'd look to sell, and it collapsed back through here and created a lower low, I'm not really going to be wanting to keep sitting into my long. Right? I'd just be a little bit mad at myself that I'd gone against my bias. So it may well build up, but still, even as it's looking, not much is really going on. So I would say just wait for more price action. Personally, it's a bit of a gamble whether it's going to drop here or not, based on what we're seeing so far. So just wait for more price action is the answer, and then the answer will become clear. If you don't know what to do, don't do anything. All right, now Solana on H4. Again, I might do H2 actually. We have this big area of compression, and we've just missed the high of it, the extreme. So it makes me think we're going to probably come up and tag it. I don't know why it does that. I just look at it as market law. When you get a big choppy environment, it tends to hit the extremes and then continue. Or it may come very close to it and put another lower high in maybe and do something like that. But because it hasn't been hit, I'm just a bit like, I don't think the market's ready to drop yet. But once that's hit and then we put in a lower low, that's essentially my sign, right? It might do something like that. Or, I don't know, use your imagination, right? Something like that. Basically, when that high is hit and then we get a lower low of significance, then I'm happy to like throw another trade on. But right now, it's not really doing that, even though it has formed a range, tries to drop, pushes up, tries to push up, hits the low of the range, and now the next breakout is going to be key. So if we look on the hourly time frame, it's kind of flattened off a little bit, but if it starts rounding off, I'm happy to short this and to look for lower lows, and to also come back down here as 61 as my target, but not yet enough confirmation. This second attempt to break out to the downside didn't work, and we wanted to see really after this big strength something follow through. So just waiting now to see if it's going to break to the upside, test this level, and then maybe fail, or if it comes down below this support and then retrace, then I'll look to short. But because really the danger is that, especially since this has not yet been tapped, it might come back down to the support after breaking the range and retrace to come and test the high, and you got in a little bit too early. So I would like the confirmation of that level being broken, retrace, and then get short, or come up here somehow, touch that extreme, and then look for a short. So yeah, that's kind of Solana. Still bearish, still looking for $50. Market structure hasn't changed to the upside, and it probably doesn't until maybe above $87. But for now, this looks like it's just going to keep building and drop a little bit lower, is what I hope is anyway. So yeah, just waiting for more price action. Seems to be the theme of the stream. Right. Hyperliquid. Kind of putting in my bullish scenario, which I painted in my video this morning and in my morning article. So here on H4, can't see a huge amount, other than the fact that we had this big uptrend. We had the previous all-time high, and at the previous all-time high, we range, drop, and create this low, which forms the higher high, holds that low, and then we get another higher high. So we know this is a big area of liquidity. And on a retest of it, price broke through it, ripped back up, creating a new all-time high, and now has dropped. And then along the way, I would say this is in control, bulls are in control, and at this point is where a big key area for selling gets taken out, and this is where the buying took place for that. So sitting on the shallow part of this compression, if we look down on H1, inverse of what I've just been talking about on Bitcoin, you get the compression and then you get the impulse. It's going to either test the shallow part and bounce, or it's going to come down to the deep area of liquidity, which it didn't. So here we've got a very clean range that has formed, and now waiting for the right signs, which look to be coming soon. So we have a range, creates the lows, and then pushes up above the high, uses the high as support, but puts a few failed attempts to push up, ranges, so it drops back into the range, ranges at the mid-range, drops through the range low, finds strength to hit the range high, straight back down to the low, and is now straight back to the high. So the bullish case here is that this is going to create a higher high, and then I'd like to see another higher low, and then another higher high to confirm for me that this is going to hold and trend away to the upside. Or it may put in a higher high and then a lower low and then a lower high and then a lower low, in which case this would look like it's topped. Or it may not even do any of that. It might just come put a low, lower high, lower low, something like this. But it's looking pretty strong. We're in an uptrend. So I would be looking for a breakout to the upside, a retest of the range, either to enter or to wait for the next breakout as confirmation that this is going to continue. So quite a simple view on Hyperliquid. It really is, as I was saying this morning, just kind of something to be a bit more reactive to rather than try to predict, in my opinion, unless you're, you know, in a bull-tarded mode. But I feel like it's at a point where it could potentially top, could also potentially just rip up to $100. So just waiting for the signs. I'm waiting for the market to tell me what it's going to do rather than going in with anything like, yeah, it's going to go to $100. So when I see a breakout to the upside, I'm taking that first thing. I just want to see a bit more confirmation. And if it is going up to 100, you're going to have, like, even the confirmation is going to be enough to get in and still profit immensely. So I'm happy just to wait for a little bit more time. But that's what I want to see now. Higher high, higher low, higher high, and then look to take a punt and push that up. If that setup fails, then we've probably got a top. But we'll wait and see what develops. But that's essentially how I'd look at things. We have a key range at a key level, and we're seeing, after a couple of failed attempts to drop, now we're pushing back up. So higher highs would logically say that the market is going to continue to push up. All right. So that's that. I'm going to have a bit of water. Any questions on that? Any chart requests for the next part where I'll look at some coins? Yeah, let me know while I drink. All right, let's look at the chat. What do you reckon about indices such as SPX and DAX? What do you mean, what do I reckon about them? Are they good names? Are they good to trade? I don't know. What do you mean? Let me know. Matt, you're incredible. Thank you. Ugo says hype. Yeah, just covered that. Let me know what you think. It's Aphex. Thanks, Matt, for your stuff. I trade very similar to you and feels good to have online dude doing what I do. I want to ask you on your double break of the range to enter a position. You enter limit order or wing it at market price. What I do is enter a position at the extreme and then at breakout in my favor, I double down. ETH now got fucked with war news. Yeah, so I cover this in my videos on my YouTube channel. The price action strategy for beginners, intermediate and advanced is all on my YouTube channel. If you click the link in my bio, it will go to my YouTube channel, and then you can find it on there. You can just search on X, because I put them on X as well. Trader Matt, how to trade price action strategy for beginners. Holy shit! Some chat actually appeared. So it's amazing because it's never usually worked. Or if you go onto Kraken Crypto Exchange, their YouTube channel, they've got 3 videos out at the moment, but by next week, by the end of this week, actually, I think it's by Wednesday, they will have all of them. Actually, let me just get it up and you can see it. Kraken Crypto Exchange. Right. Hey, there we go. Technology. So these top 3 videos at the moment, stop trading in the middle of the move is like the very beginning episode. And then this is more, the second episode is more about how to add a little bit of nuance. And then the third one is, yeah, as it says, how to find supply and demand zones that actually work. But within this series, and then within the one on my YouTube channel, I don't think that's going to come up. No, it's Matty Boy. It's just got the other one. But yeah, you'll find it on my YouTube channel, basically. So just to say what it is, like, I will wait for the second breakout of the range and enter at market. I have done it in the past where I do what you do. So let's say I'm looking short here. I would enter on not that one because it looks a little bit weak, but this one. So it's either like in continuations, it's the second, but usually in reversal, it's like the third or fourth. So that one would have been my entry trigger, and then that one would have been my entry trigger, and I just would have gone short at market with a stop above the highs on either instance. But I have tried to like take trades that side and lost too many. Like I'll take the shorts and I'll get tagged by a little bit, or I'd get the fake out. So I developed the entry to just be on that third or fourth breakout in reversals, or the second one in continuations. It also depends on the volume of the market as well. Like this was it started going a little bit weird, the volume around here. Whereas like down here, for example, you can see just like kind of 1, 2, and then goes. But yeah, it depends on the environment. It depends on where we are in the chart. It depends on looking at a reversal or a continuation, and it also depends on the time frame too. Right. I hope that makes sense. On X, the chat is not active from what I see. So this is... Now, it is active. It's so weird. Like, I've set all this stuff up to... I've set all of this stuff up to get the chat from YouTube and X, and it never, like, works. And it said if I've got my YouTube connected, it should go automatically there, and it should do both of them. Clearly it's not. It's just doing X, and not many people chat on X, as we can see. So yeah, let's have a look. What else we got at? Could look at them and look at the key levels. SPX and DAX you're talking about, aren't you? Yes, I will do that now. Lee Victor says, hey Matt, I'm a new member. I just want to know how you identify exhaustion if Bitcoin hit the 68K area. Did I not cover that? I'm pretty sure I covered that. Did you watch that? Bitcoin at the 68K area essentially is going to be a typical reversal pattern, which is just a range to form. And then, as I've just been talking about, a couple of breakdowns to the downside, maybe a test of the high and then the breakdown. Not really sure. This doesn't really look like how I'd be looking to get in. But here's an example, like it ranges, breaks down, goes to push up, drops, goes to push up, and then drops again. So I'd be looking for something like that up at the highs, essentially. Just a reversal pattern. Again, you can find them on my YouTube channel. Right, too many windows. SPX. All right, let's look at SPX. SPX, is it going to come as SPX? Nope, that's a crap one. I think there's one below. No. Okay, whatever. Okay, SPX has been a long time since I've ever traded on this. So here we are on the daily time frame, and this is how I'd be looking at it. We've got the big high here, and then we have down here where the decision point was formed. This is where the buying took place to break that high, and then we have the continuation. I'm whizzing through this, but we'll do it on a lower time frame because it's better. But then pushes up, retraces, puts a new high in, retraces back down to the retrace point and puts in a new high, and then breaks down below it, pushes back up to the high, and is now kind of mid-range. So it's like sort of like that, in my opinion. Still obviously looking bullish. If we look on H2, is this the best exchange for it as well? Have you got a different one that I can look at maybe? Because I hate all these gaps. Where's that square? Just like that, just fill the gap like that. Right. Yeah, this is kind of why I don't trade it, because it's just nasty. So we do have this big low here, which is what I was talking about on the daily time frame. This is where we get the impulse up. Oh my God. We get the impulse up, the retrace, the higher high, the retrace to the retrace low, and then a higher high, another retrace to it, and then the higher high again. And from this point, price sells off, retraces, and then sells off to break that low. So we know this is a key area here. So if we come down to H1, that would have been my supply zone extreme. The whole zone is sort of like from here, like that. But I would just mark the extremes, the wick highs and the candles. Comes down, lower high, tries to take the low, and then retraces all the way back up to the extreme, as I've been saying throughout this stream. This is kind of how price moves. And then ranges, pushes up, comes back down to the range, and then it's kind of going mid-range. So if we look maybe on M15, we can see the area of compression that led to the impulse above the key highs, the compression, the impulse there, and then it's going to retrace to either the shallow area, which is kind of where the pump comes from, which it does, or it's going to come down here to the extreme. And really what you want to be seeing is price now starting, because it's come down to the support, it's created a higher high, and now it's come back down to support, and that support or that range is kind of like that, and it's hanging out at the range low. So if it breaks down below it and holds, I would say it's destined to come down here at 73.50, which is kind of the end of the compressed chain, where the downtrend, we had downtrend here, break out of it, and then instead of continuing back down into it, this is where the buying took place to create that. So this is a really big level and probably going to be your best risk reward for longs. If you're not in the market and you want to get in, that would be a great place to look for longs. I'd look for reversal signs there, similar to this, like comes down, puts in a sort of W pattern, and then finds an impulse out. So I'll be looking for that down there. Or it may just do the same thing here, or it may even do the same thing here, and then start breaking above that range and filling out all of this compressed area to come back up to the highs. That's M15. But so I'd be looking ideally on like the hourly time frame, maybe for that previous low, or for price to find some strength here and continue to push. Look at ES for 20-hour, 4-hour chart. No, I missed that. I hope that makes sense anyway. Or FDX for FDAX for DAX. Okay, let's look at DAX now. FDAX, DAX futures. Yeah, you see, you still got the gaps. Is what it is. We can fill them up with boxes. It's all right. So big range here on DAX. Oops. Something like that, I would say. You have a big impulse up, takes out the high, retraces down, and then tests the high again, and then it's been using that low as a pretty significant area. And then we have another range within that range, which is now breaking up to the upside. So I would say that we have a key point there, which is the left shoulder of that range. It's where the high of the trend got up to before we get the retrace, and then the trend high retest to define my range. So sitting on that high, we have, if we get our little box again, just to fill in the nasty gap. Oh shit. Like that. So now we can see things a little cleaner. We have this demand zone here, which is kind of a decision point where the buying took place again. This isn't going to be perfect, and they never really have to be perfect when you're doing TA. If it is perfect, it's better. But we've got downtrend here, and then it breaks out of it, and instead of continuing back on the trend, finds strength to push up, range, and then create a new high. So that's kind of like the end of this area of compression. If we don't get an impulse up, I expect it to retrace down here, in which case you can look for reversals or for it to break and then to look for shorts. We're right at the top of a move, so taking longs up here is probably not the greatest idea, traditionally speaking. But on the hourly time frame, this is a nice area to start looking for reversals, in my opinion, better than up here. I do have a bit of a range that is forming, but it looks quite bullish, doesn't it? But I wouldn't be surprised to see this retrace down to this point here, about 24.6, or the next area just above that, which is this level here, about 24,800. So one of those two areas I'd prefer, if I'm not in position, which I'm not, and I'm trading it, I prefer to see a price retrace down there and look for reversals. Okay. And then we have Majackals.eth says, ETH please, I've done that. What's the take on the market at the moment? I am sitting on short master and ETH. Well, I still think the market is coming down. I still think I'm still bearish. I've had lines in the sand where I think if this goes above certain points, then we're going to start looking bullish, but that's not going to be up until about above 68k, but really above 74k where things start getting quite significant. So I expect things to keep coming down, except maybe hype I'm not so sure about, but like with Solana, with ETH and with Bitcoin, I feel like we're going to get another impulse on a higher time frame to the downside. I just feel like we're probably going to see maybe a retrace up before we get that, by the looks of things anyway. All right, so I'm going to move on to the next section. Thanks, cheers, man. Next section of this, which is how to use market structure for trade targets. So one of my subscribers asked me about, because I make killer entries, but where would I look to take profits on these positions? And the way I do that is to use market structure. And I'm going to use the most recent example with Bitcoin as an example. So if I just get rid of all of this. Okay, so for example, if we paint the whole picture, right, we've got this compression down, which takes out the big low. I am going to do this in an article format as well, by the way, for my subscribers, but this is kind of going to be a bit of a video reference for that article. So we have a downtrend, price is compressing, and as I've been saying, it's going to either do one or two things: impulse down or push up and go back to the extreme. It comes up like so, and then instead of dropping here at this point, it again finds strength to push up higher high, higher low, and create this entire swing. From this point, if we look at this range, we can see price comes down, and remember we're at this key area, at this key low, which broke us out of the downtrend. So price comes down to it, creates a high, hits the low, creates a higher high, creates a higher low, and then comes back up to the high and then bursts out of it. So this is where the buying really took place for this entire swing. So even though we're bearish biased, we're only bearish bias as long as this place holds up here. So any move to the upside, you should look for the most extreme part, or roundabouts the most extreme part, for where you should set your target. Because how do you know not to take this high or this high versus like the absolute extreme level? And as I just say, it's just something like market law. It just tends to gravitate towards the extremes of the levels. Like even here, this is the absolute origin, and look, it comes right back down to it, not once but twice, 3, 4, and then goes. So a couple of ways to look at this, right? Let's say, for example, you've taken the breakout here, like so, and you're going to use the other side of the range for your stop, because why would you go any wider? You've made this decision that it's broken out of the range, so the range should be holding. So if you've taken that, how do you know not to go for the most recent high? How do you know not to go for this high, or how do you go for this high? And in some instances, you may go for this high, and it may only come up here, in which case, you know, it could drop like so, and then you're kind of left with your dick in your hands. And this is really why I don't like going against the trend, because it's harder to hold in a downtrend when you're long, or, you know, just counter trend in general. So if you're short in an uptrend, like I just find it harder and less comfortable to hold those positions. So I always end up looking for the extreme of the level, because again, I know it's going to be tapped at some point. So even if we weren't counter trend, let's say we've got a high that's formed, I would still use the end of this swing. This is where the most liquidity is. So you could either have a TP on it. I think the actual extreme of that level is right up here. So you can either have a TP on it, or, as I tend to do, the same if I'm entering at limit orders, I'll give my, like, let's say I want to enter at this point, I'd probably give it a little bit more padding just to make sure I get in, because you're looking for picture perfect otherwise. And then the same up here, you know, the absolute extreme, you might have your TP there, but it doesn't reach it, and you've just missed out on a little bit. So I always offer a little bit of padding either way, and my stop, just because of those little like fake outs and stuff, you missed it by a little bit. And, you know, it really sucks when you've got a limit order open and it misses it by a couple of like pips, or it wicks through it and doesn't trigger and then goes and hits your target. It's really painful. So I always have a little bit of padding. In this instance, right, so there's another way you can look to take profits out of this, is as it trends up, you just use the trailing stop technique, which I talk about. So the trailing stop technique is, if let's say we have a range and it breaks out and then I've entered here, I want to wait for 2 higher highs and 2 higher lows before I move my stop from here to here, because the logic is it shouldn't break the first one, but it's not catastrophic if it does. If it breaks the second one, then you fucked and it should be going down. That's kind of my logic with it. So once it's at this point, I can move it below there. And then when it's at this point, I can move my stop below there. And then when it comes to this point, I can move my stop below there. And then it's come to this point, I can start moving my stop there. So that's how I trail my stop. I give it enough room to breathe, and I give it that kind of like, it shouldn't break 2 levels type of logic. Sometimes it does, but way less often than it breaks the first level and then continues. So that's how I do it. So I would have looked at this point. If I'm long, you've got 1, 2, 3, 4 there. You've got your 2 higher highs and your 2 higher lows, and you can start trailing in profit, and then you get your next higher high. And then where's your next higher low is there, and you get your next higher high. So you could technically probably move under there. You probably got fucked if that happened. This is what I'm talking about. Sometimes it does go. Or, you know, you could have waited or left it at break even. And then once this move has happened, every time you get the high high, the second one, sorry, you could trail stop. You get the second one here, and you could trail stop there. Boom, 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 boom. You could trail stop there. And then you could maybe get the heebie-jeebies that it's got to come right up to the extreme here. And if it doesn't, it might lose it. In which case, like you can see, maybe that's where you end up getting taken out for your trade. So even though you might have planned a, whatever this is, like a 2.8 2.8 hour trade, 2.9 hour trade, and you only end up getting 2 hour out of it, well, that's fine because it didn't get to your target, but you've still got most of the move following that trailing stop method. And that's available on my YouTube. Just look for the stupid avatar thumbnail with me with the sunglasses on about trading stops. And then the same way, like really what I should have done, and I didn't do it because I'm a bit of an asshole. When this level got broken, we have the range down, breakout to the downside, pushes up, and then I get my entry. Where am I going to be targeting? Well, I was a dick, and because I thought it was going to break lower, and it probably is at some point. I was holding out for lower, but really you want to be looking at the market structure defining level, and it's this point here because this is where the entire swing up gets put in. So you'd be looking, like I said, with a TP, there's the whole level, your TP having a little bit of padding, and you would have caught that. Or again, you could have looked at the fact that all of this is part of the compression. So you go for the shallow area or you go for the deep area. But as we're in a higher time frame downtrend, I would have gone for the more extreme level. And then at that extreme level, if you're still in and it pushes up and puts that higher high in, maybe I would have taken profits then, but I was out with my son all day. But that would have been your reversal sign that it's going to come back up. It may not come back up and where your stop would have gone, but you're going to have to sit through a potential retrace. So that's kind of how I look at taking profits. I hope that makes sense. But like I said, I'm going to do an article on it and make it a little bit more coherent. So there's no real hard and fast rule of where I take profits. I have kind of targets of, like at this point, I would have preferred it to come down here. And I would have been looking more for reversal signs closer to that point and being like, right, I'll cut it. Because even if it does come up and go down, I'm like, well, it's kind of gone close enough to my target, giving me a reversal sign. And that's what I take. Even if it would have produced more risk reward, I've got to take the signs. So yeah, that's kind of how I do it, basically. Any questions on that? If anyone here is paying attention to it. Jackal says, great streams, by the way, always watching you. Thank you, man. Thank you. Appreciate that. Right. So if there's any questions on it, let me know. All right. Otherwise, let's move on to the last section and then wrap this baby up. Thing on YouTube. Need to get this chat thing working. All right. For the last part of the stream, I've put a section called how to, or just about sitting on your hands after a big move, after it's played out. So if I push up to H4, for example, just remove some of this drawing. I mean, this is all like a really pertinent subject, and one that I still struggle with, one that I still have to kind of like check myself with, but I have a way to get involved where I'm not like in that uncertainty, where I'm in that kind of, I've made this big move, I'm going to try and get a continuation of it. I've recognized the signs over the years where I've got a little bit too excited to continue moves which aren't logical. And it's born out of like seeing, like for context, I had 80.476 I'm short from as an average on my recent swing high. I've still got ones from like 97 and 103. But I took one here, a couple of trades here, about 80.476, I'm still in them. But once it's come down all this way, you get so used to the fact that everything's just tanking. You kind of go, right, I'm expecting this to continue. And when you've got this compression, like I said, I want to see an impulse out of it, or as I looked at it down here, I wanted to see maybe it was just a quick deviation and then comes back. So that was a trade that I wanted to play. But when it like puts in a big momentum to the downside, which looks like it's continuing that trend, in the past, I've been not trigger happy, but I've like, go, okay, this is a continuation. Let me just like be really static with my risk management and continue the move. But what I've started doing now is just taking smaller bites out of this, because again, when it's obvious, it's really obvious something's going to happen. And then once I get the obvious, I can add a little bit heavier. So I've had to kind of check myself, especially in this instance. And I've been saying it to the subscribers. I've been saying it in my like posts on X. I've been saying it everywhere. If this is going to go, it's going to go. And when it's kind of putting in B grade signs, I'll take a little bite out of it, maybe 0.1%, maybe 0.2%, and build up to a bigger position. Because if it does go, I can get like 4 or 5 positions. And then when it's finally going, and I expect it to go, and it becomes undeniable that it's going to go, like similar to like up here, I can get in much heavier. But the little small bites of it are what keeps my my emotions in check, because I don't feel like I'm missing out on something that potentially might happen, and I've got some exposure to it in case it does. And you know, in the same way that actually I just talked about, where you might not always get your take profit, you're going to get what the market gives you. So if it only gives me an entry where I can't logically say, right, I've got to go in, I'm going to go in full risk, but I'm going to go in like 10% risk, and I'm running a 10% risk trade, then so be it. That's what my system says. And I have that system in place to ensure that I don't go on these death spirals, and I don't like fuck up my accounts basically, but also like don't mess up my headspace. And that serves me well in opportunities like this, where I've taken small bites out of it. I even took small bites here, so I wasn't massive in this short, which I got stopped out on today, compared to this one. This was like in total 4 or 5% risk. Down here, I was like 0.4%. So nowhere near as big, but you know, I'm able to take that knowing I've still got big positions on that I'm riding. So when I see the signs, like I said, I don't want to get long because I don't know how much I trust it, but I'm just the way I approach it now to ensure that, because I like to be active, right? I like to be involved, and there is always that kind of feeling that you might miss out on something if it does pump, because 9 times out of 10, this will probably do what it's done, but there's that one time out of 10 where it just fucking capitulates like shit, and it's such a rare event, and it just keeps going and going and going without mercy. So it's almost like I just try have something on just in case. Like I want to get involved, and if it does make sense to get involved, then I will do so. But yeah, I used to go in heavy, and then I used to take multiple signs incorrectly, and I might lose 3-4% of my unrealized, because I just like arsing around trying to get in full size on like high feeling that I've caught a massive move, and I'm not cocky, but just quite confident that the next signs, and I'm confident that the market is just going to keep going down. And I've like given up so many profits doing that it's kind of made me realize like, hey, just that sign, you have to just sit back a little bit and chill. Or if you really do need to get involved, just take like something that's not going to hurt. And if it does go, like happy days, you've got a little bit extra. But if it doesn't, you haven't lost much, and you can always get back in on bigger size when the really obvious comes. So I'm still waiting for the really obvious. But that's kind of like my technique to sit on my hands when I know, especially when I know better to. Like I knew better to sit on my hands at this point. Like I knew it was better, and even like here, I added like a little 0.1% on top of it with, again, wide stop, just to have like a little bit of exposure. But yeah, like it's at the end of the day, it's just one trade as well. But because that one trade can lead to a death spiral, I kind of have learned the hard way to just kind of suck up that maybe I don't always get the maximum risk that I want available to it, but the market is going to give you that. So yeah, I hope that's all kind of blended together in terms of even like where to like using the market structure to define where to take profits, and like having little bites of the apple in case, like, because one of the like the hardest thing as well is um when you've like, let's say up here for example, you've got the move right, but you've taken like some, maybe like you took the wrong one and then you went a bit too tight with your stop, and then you did the same thing, and then you want to get out because it looks like it's going to rip, and then you again you get in here, but then you might get tight stop. So you could take 3 or 4 losses. Well, I can anyway, especially when doing it on the 1 minute time frame. You can take many losses and still like predict the breakout correctly, but you've done your ass on fake signs, and that's why I like big reversal points to kind of take smaller bites. And then this one was a really obvious one for me, but especially when it made the lower low. When it took this low out and put the high in and then started closing below, that was my second entry. And that's when I had a bit more conviction because I'd had like a little taste for the market. But when it's come down hard and I want to just continue this and just like keep printing money and just keep the move up, I know that feeling now is just chill a little bit. And maybe if you really, really cannot resist, take a tiny position, but it's not going to hurt, and just take the one, because again, something I've had problems in the past where that 0.1%, suddenly the conviction starts improving on B grade signs again, because I'm in like a little bit of a la land, being so correct on the previous move. I start to add smaller positions that become like multiple smaller positions, which actually ends up being a big position, and I'm still wrong. So yeah, it's like one small position and let it ride, basically. Bitcoin looks like it might top out here. It might be a lower high. So again, I don't know if you heard, I made a little squeaky noise a minute ago while I was talking. I saw that it was going to close, and I've taken another small bite of that just literally right now. Again, with a stop above this high here. So if it goes, it goes. If it doesn't, if it does build up, then I'll stick to my original plan. But now that it's closed back below this supply zone, which I was looking at, and on M15 has created this kind of compressed channel, I'm expecting it to impulse down. But again, if it pushes up, then I have my invalidation. I'll get out, tiny small loss, and then look for the bigger one, you know, because maybe we have a range up here that ranges overnight and then goes. Lots of different ways to skin the cat, right? But that's my way. That's how I do things. My keyboard's run out of battery. Any other questions before we go, guys? Otherwise, I'm going to go. We'll cut this early. Well, it's not early. It's been about on time, really. I hope you've enjoyed it. I hope you've learned something. I hope you're able to profit this week. I hope you have a good trading week ahead. And I will see you guys Wednesday. I've got Kieran Duff on Wednesday. I'm really looking forward to that, because as I venture into the world of automated trading, Kieran's managed to do that. And this entire stream is basically going to be me asking him a ton of new questions about how can I go from absolute zero to making money this time in 6 to 12 months with an automated system. What do I need to know of? How can I do it? Where do I start? So if you're interested in automated trading, this is going to be a really good stream to cover, because he's been doing it for a couple of years now, and he had a killer year last year, and has managed to stack up quite a lot of capital from various different sources, which he's now playing with. And similar to what I'm talking about here with like taking smaller risk, that adds up when you've got more capital. So yeah, it's going to be a really interesting conversation. I think it'll be really insightful for anyone looking to go down that route as well, as I am. Cool. Take care, guys. If you like my content, if you want daily updates from me, hit subscribe on X. And yeah, let's see what happens for the rest of the week.